You can make money on a prop firm account and still fail. You can be green on the day and still breach. You can hit the profit target and still be blocked from payout. That sounds insane until you understand the machine. Most traders who fail a challenge think they failed at trading. Bad entry, bad setup, bad luck. But a lot of the time, they failed because they misunderstood the rulebook. Funded trading is not just a trading game, it's a rules game. The firm gives you a profit target, a daily loss limit, a drawdown rule, sometimes a consistency rule, and then watches whether your process can survive inside those constraints. Same chart, same market, same trader. But if one understands the rules and the other doesn't, they're playing two different games. In this video, I break down the machine, how prop firms actually work, why the profit target is not the hard part, how daily loss limits kill emotional traders, why trailing drawdown can fail you even when you're green, how consistency rules block payouts, and the one number that matters more than the price, the account size, or the target, room to be wrong. At Imprint, we build tools around this exact problem. Imprint Flow helps you read order flow more clearly on NinjaTrader 8. Centurion helps enforce risk rules across accounts. But before any tool matters, you need to understand the machine those tools are built to survive. None of this is financial advice. Futures trading carries substantial risk of loss. Most funded traders lose their accounts, and you should test everything in simulation first. Now let's open the machine. A modern futures prop firm is not just selling you capital, it's selling you access. You pay to take an evaluation, usually a simulated account with a profit target, a loss limit, and a strict rulebook. Pass it, and you move into a funded account where you trade under tighter conditions and may earn payouts. That's the model. But here's the part that matters. The firm isn't looking for the trader who makes one huge lucky trade. It's looking for the trader who can operate inside risk limits. That's why the rulebook exists. The rules are not random obstacles. They're a filter. They filter out traders who oversize, who tilt, who can't stop, who make one big day and give it back. So your job is not to beat the firm. It's to prove your process can survive inside the firm's boundaries. That means the evaluation is not a sprint to the profit target. It's an audition for discipline. The traders who get that don't ask how fast can I pass. They ask, how do I avoid breaking a rule long enough for the target to arrive? The target is not the enemy. The rulebook is. The daily loss limit is simple. Lose too much in one day and the account fails or locks. But simple doesn't mean easy. The daily loss limit is not just a risk rule. It's an emotion test. It tests whether you can stop when the day isn't going your way. A disciplined trader takes a loss, reduces risk, or stops. An emotional trader tries to make it back. One more trade becomes 2. 2 becomes 5. Size increases. The plan disappears. Now they're not trading the market, they're trading their frustration. That's exactly what the daily loss limit is designed to catch. It asks one question: can you have a bad day without turning it into a fatal day? That's why risk has to be enforced before emotion gets involved. Because willpower is unreliable, especially after a loss. This is where Centurion matters. You set the daily loss limit before the session, while you're calm. If that boundary is hit, Centurion can flatten positions, cancel orders, and lock trading for the rest of the day, because the worst version of you should not decide when to stop. But there's another rule that's even more misunderstood. It can fail traders who think they're doing well. It can fail you on a green day. That rule is trailing drawdown. This is the rule every funded trader needs to understand cold: trailing drawdown. The dangerous version follows your peak balance or equity as the account rises. As you make a new high, the drawdown line moves up behind it. But when you pull back, that line may not move back down. That creates the trap. Picture it. You're in a trade. It moves in your favor. Your open profit rises. Your account hits a new high on paper, and the trailing line ratchets up. Then, the trade pulls back. You're still green. You may even exit with a profit. But because the line followed the open high, the pullback brings you too close to it. Traders can be profitable on the day and still fail because the trailing drawdown followed unrealized profit that existed for only a moment. That's why they say, I was green. How did I fail? They were managing the trade, but not managing the rule. With trailing drawdown, open profit is not just open profit. It can move the danger line. So know your drawdown type before you take any challenge. End-of-day drawdown is one game. Intraday trailing drawdown is a different game. And it connects to the number I mentioned, room to be wrong. The tighter the drawdown, the less room your process has to breathe. And perfection is not a strategy. Now, the most important comparison. When you compare prop firms, don't start with price, account size, or profit target. Start with room to be wrong. Room to be wrong means how much normal trading error can your process survive before the account is in danger. That depends on the relationship between the daily loss limit, the maximum drawdown, the drawdown type, the profit target, the consistency rule, and your own behavior. If your process has small losses and tight control, you may operate inside stricter rules. If it has larger swings, you need more room. Neither is automatically good or bad. The point is fit. A firm isn't good because the challenge is cheap. A firm is good for you if its rules fit your process. That's the standard. Does this rulebook give my proven process room to be wrong? Because every real strategy has losing trades. Every real trader has red days. Every real process has variance. If the rules leave no room for normal variance, you're not taking a challenge, you're walking into a trap. So compare on room. Room to take a normal loss, room to have a normal red day. Room for open profit to pull back without breaching. Room to reach the target without oversized trades. Compare on room to be wrong, not price, not hype. In funded trading, risk control is not a feature. It's infrastructure. You don't want to rely on mood, on willpower, on "I'll stop if it gets bad." That's not a system. That's a hope. Centurion is built for the infrastructure side, a multi-account trade copier and risk manager for NinjaTrader 8. It distributes trades across accounts, supports account-specific sizing, gives you flatten all and cancel all control, and most importantly, it enforces risk boundaries like daily loss limits and lockouts. That matters because the rulebook does not care how you feel. If you breach, you breach. So your risk system needs to be colder than your emotions. A proper risk system says, this is the max loss, this is the max size, this is the trading window, this is when we stop. This is what happens when the limit is hit. No debate, no revenge trading, no one more try. That's the difference between a trader hoping to be disciplined and an operation that enforces it. The read is Imprint Flow. The risk infrastructure is Centurion. The rulebook is the machine. Your job is to operate inside it without breaking. Here's the whole machine in one breath. Prop trading is a rulebook game. The profit target gets attention, but the rules decide survival. Daily loss limits test whether you can stop. Trailing drawdown can fail traders who don't understand open equity. Consistency rules can block traders who win too lumpy. Payout gates mean green doesn't always mean withdrawable. And the best firm is not the cheapest or the biggest. The best fit is the rulebook that gives your proven process enough room to be wrong. That's why Imprint exists. Imprint Flow helps you read the auction more clearly. Centurion helps you copy trades, size accounts properly, and enforce risk before emotion takes over. If you want to start free, comment the word tape, or go to imprint.ltd/free for the free order flow cheat sheet and a free NinjaTrader 8 indicator. If you want the full engine, go to imprint.ltd, and this week use code USA40 for 40% off. Anyone who gets Imprint in the next 60 days gets the automation upgrade free when it ships. None of this is financial advice. Futures carry substantial risk of loss. Most funded traders lose their accounts, and you should test in simulation first. Don't chase the target. Survive the rulebook. Compare on room to be wrong. Subscribe and watch the next one, where I break down the exact failure mode